traders, welcome to the TMT Stock Market Strategy video for Wednesday, November 23rd. Before I begin, I would like to wish everyone a happy Thanksgiving to you and your family. Be safe out there. Eat a lot of turkey. Get stuffed. Why not? It's one day a year. You don't have to worry about your diet. It's going to be fun. I usually enjoy a lot of family, friends, nieces, nephews, uncles, aunts, and it's a great time of year to really start to digest, family and friends, and to be thankful for what we have, and what's to come. Actually, look forward to the future, and it's going to be a great and exciting 2017. Let's get back to the markets. Well, we had a slow grind higher yet again. It's going on 13 trading days, and the markets are up every single day on very, very low volume. They either gap up or they just kind of stall during the course of the first hour, and then they slow grind higher again. So not a great day trading environment, unless you're looking for certain stocks or something that comes across your monitor. So it's been very, very quiet. However, I do believe now, based on a technical view, we are coming into a weakness, a good part of the time of year where we see tax selling. So the next 2 to 3 weeks, we're going to see some weakness in equity markets, and it would be lunacy if they don't. They meaning the position traders and the money managers, hedge funds. Now I know that they're looking to take profits. At one point in time, it would be crazy not to take profits. Up, give you an example. Russell up over 14% in less than 2 weeks, which is more than a year's gains in less than 2 weeks, and it's just crazy. I see that, and I mentioned, and I not to get into it, that the markets are officially broken, and they're totally run by the algorithms and HFTs. There's not a question in my mind. I see what goes on during the course of the trading day, trading algorithms, creating them, developing them myself. It's a crazy time where you look at markets and they go straight up. And I think that's going to continue until Obama administration gets out of office, because he wants to go out on his white horse saying that he did a great job. But when the time comes and all of this unwinds, it's going to be really, really nasty. It's going to get ugly. Now, when nobody knows, it could never happen. But you can't have equity markets not take a correction, a 10 to 20% correction within the last 9 years, since the low of 2009, and not correct. At one point in time, it's just a matter of time before things start to unravel. You're going to see a lot of buybacks to 2017, because there's no regeneration of businesses, of creating products. So they're going to buy back their stocks, and at one point that's going to catch up to them too as well. The culprit's going to be the dollar, China, and I'm going to put a year-end video together of what I expect is going to happen in 2017. So anyway, let's get right to it. Here's the one culprit. Here is the dollar. I do believe this is a real move, and there is a gap here that's going to need to be filled, and at one point it will get filled, and then start to pull back down again. So I'm looking for a gap fill, and then another move, start a new leg higher. So you can see this is a big basin pattern here. Here's your first move. We're going to pull back, and it probably in an ABC, and that third move is going to be really, really exciting. GLD, it's going to eventually affect the gold and commodity sector. And you can see here, I mentioned we had that thin zone. Watch out for that. If we hold, I think we're going to break. I just think it's inevitable. We're going to break lower unless there's some sort of fear that really comes into the market. Gold's going to be a great 2017 candidate, but I'm not looking to get into gold yet. I want to see one more flush into 1180 to 1200 in gold. Right now we're sitting just above 1200. So what I mean is more like 1170, 1180, 1190. It's just anything under 1200. Create a whole new base, something like this, and then start to excel higher. Okay. Next is GDX. Same thing with the GDX. It's the same way we're going to trade it. One more push lower, probably into the 16, 17, 18, 19 area. Let it base, and if we break that 18 area, then we're gonna flush back down to the January lows. Spiders into the indexes. You can see here. I mean, you have to be rational about what's going on, and this is all on what Trump is going to do, or on the hopes of what he's gonna be doing when he becomes president. I mean, that's all well and good. Maybe 1 or 2 day rally, but to have 9 days straight up and everything make new highs, when you have a fully valued market. I just, to me, that bothers me as an old school type trader. You have to use caution here, and to me, high probability trade is just not there. You have to wait. You'll get it, but it's not going to be like you're going to make 5 or 6 trades a day. It's just not going to happen. 60 minute, you could see nice big bearish rise in wedge. We do have some negative divergence here as the market is forming higher. So just keep an eye on this wedge. We need to break this little wedge here. We have the bigger picture wedge, as you know, which measured all the way down to 185. We're back in it. We did break out. We not only did we back test it, but we're back in the wedge. So if we take this out, then the wedge will be negated. But as of right now, it still stands as a decent bearish rising wedge. Next is going to be the IYT. And look, no doubt about it, this is definitely a bullish sign because it is our leader. But remember, guys, look at how far away you are from the 8 and from the 21, okay? Do you buy the transports up here or any of the 5 indices that I'm showing you when you see the 8 and 21 this far away? Absolutely not. It will come back in. It's just not going to say see you later and not come back. I mean, look at the chart. It will come back. So please, don't try to be patient. Don't look to get into something that's overextended. Look at this. Volume confirms price, guys. I don't care what anybody tells you that volume is not as a non-event anymore. It's so true. It is a non-event right now, but it does confirm price. That's the truth about it. Volume confirms price. When you have this move like this on no volume, and after the holiday is over, the Thanksgiving holiday, you're gonna have. I think you're going to see a pullback at least back to the right to the top of this area here, and that's what I'm looking for, at least 125, 126. I mean, does it happen between now and the end of the year? I don't know. We got 4 weeks, pretty much four weeks of trading left. I do see us at least a pullback, at least this gap area to get filled here before anything. And last is going to be the Qs, and just sitting right here into the zone. I mean, we've been in range bound since late July. And we haven't really taken out any highs in the Qs, so we'll see what happens. But again, guys, just use caution today. I don't suspect anything happening today, and especially on Friday, unless there's something happening in Europe or in the overnight session. You're going to see the commodities trade tomorrow on Thanksgiving. They are open until 1 o'clock. Just want to give you a heads up if you want to do something exciting, want to look at some of the markets. They are open, all right? Have a great day today. And also, again, happy Thanksgiving to you and your family. And we will be back on Monday with another video. Take care.